permanent residence. You may also utilize your skills future credit to fund the training. What are you waiting for? Seize the opportunity and upskill yourself. Head over to cyberquote.com/sg and sign up now. All our courses are hosted online. Check out our free previews in the events tab of our website. Need more info? Drop us an email at support@cyberquote.com.sg. See you soon.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
The digital world is ever-changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cyberquote has been providing financial training and information technology solutions for established clients. Cyberquote is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cyberquote endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services, curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
Hi, a very good evening, ladies and gentlemen. Thank you for tuning in for this Tuesday evening webinar. Of the webinar session, webinar title Mapletree Family REITs. Are they good for first-time investors? By our keynote speaker, Darren Chiu, a Senior Financial Services Director from Philips Securities, and also associate trainer with Cybercode, as well as the IBF accredited trainer who teaching two different courses, lifetime income mastery course and also the risk analysis course, which is we are going to share with all of you here toward the end of session. Yes, so yeah, let me do a short introduction of the company as for the benefit of those who are new. Of course, for those who have been following us, just pardon me, be a little bit to share, right? Because like today's session, right now we have 50 plus people. There are some of you are who have been following Cybercode or been following Darren. Thank you very much for continuing support. For some of you, we are pretty new because you may some of you bring your friend along, and therefore we pay the video Cybercode and as well as the keynote speaker. In fact, I think we already mentioned about company of Cybercode, so I don't want to touch much about that. Let me just talk about more into the speaker himself. Now, indeed, Darren, before he joined Philips Security, he is actually an engineer himself. So in the year of 2005, so you can do a calculation exactly 20 years back. So he decided to join Philips Security as a stockbroker. So during his maiden years of his doing business with this stockbroker, getting a dual license to become a senior, to become a financial service director, I mean the manager, and then to form a team, and also partner with the other three partner to also run the branch to service his client. As of right now, Darren Chi, our Senior Financial Services Director, who have more than 40 over financial advisors and trading rep under his care. And of course, he is also one of the individual who are providing, like I mentioned earlier on, the lifetime income mastery course, which I believe quite a number of you also graduate from that course also, which is get up to 95%, 90% of the subsidy from the IBF course, right? So, and also the special thing about Darren, because he's specializing using both, in fact, three types, comprehensive financial planning, wealth management, as well as investment planning. As of today, he is still using it for his personal investment in this strategy, as well as to share with his client. So, of course, he's also one of the member of NDRT, and is also a member of the very few in the market called Top of the Table in the industry of the financial. So basically, that is a very not a very easy task for people or for a financial guy to get that level. So indeed, Darren Chiu, he got that right. Now, for today's session is a pretty short 2 hour session. In fact, we want all of you here also to ask questions pertaining to today's topic. So you can always post a question in the chat or Q&A. So in the appropriate time, Darren definitely will provide the reply. Of course, you don't ask a question to the end. I mean, throughout the session, you have question, you do ask, pose it into the chat or Q&A, right? So please stay till the end of session. Like I say, myself and Darren going to share with you one of the IBF accredited courses. Even you can use SkillFuture credit to fund for it, right? So please stay tuned. So I will pass the mic over to Darren to kickstart the session, right? So Darren, over to you.
Yeah, thank you, Andy.
Yep.
Good evening, everybody. Yeah, thank you for attending tonight's webinar. Okay, I'm Darren here. Before I start, this is this Cybercode multimedia connection. You can connect to Cybercode in any of this format. And this is the disclaimer. What I share with everyone is for your knowledge and information only. It doesn't constitute any financial advice. Do take note that everyone, your financial situation is different. Okay, do remember to do your own due diligence on that. And since Andy introduced about me, so I just do a fast introduction about me. I'm Darren Chiu here, in case some of you see and hear me for the very first time. I'm from Philips Securities. I'm also a trainer for IBF accredited program, where actually I conducted 2 IBF course, and one of the course I decided to stop it. But another course is still ongoing. It's called the risk analysis course, which will be in August, and most likely this will be the only run. Okay, there will be most likely they will not have a second run for this year, as I may start another course on ETF on Q4. Okay, and I also got my YouTube channel. You can also subscribe to my YouTube channel. to know about the portfolio I share on my YouTube channel. And also I got my Facebook page. You can like my Facebook page, follow my Facebook page. In case I got other webinar, I will post it there also. And this is one slide about me, a summary about me. More than 20 years in this industry. Before I come to this industry, I was an engineer. And I worked as an engineer for 10 years before I make a career switch to this industry. So roughly you can gauge how old I am. Okay. And I also a qualified member for top of the table. That's the highest qualification an advisor can achieve in this industry. So if you want to explore this industry and you want to know the good and bad about this industry, you can talk to me separately on this. And I also have WhatsApp community. Do take note. If you see any Darren Chew with my photo there on Telegram, do take note they are all scam. Okay, to this morning the company just emailed to me said that another scam group come out. Ask me verify is that me or not me. I tell them it is another scam group that come out. Okay, so do take note. I only have one community which is this WhatsApp broadcast community. But I don't do stock call, so I don't tell her there's something that you can get rich quick, such thing. I just mainly provide market update and also post our webinar there. And also this community have grown in size over time, and we do quarterly exclusive webinar for the community member by itself. So if you are keen to join this community, you can scan the QR code or click on the link. Okay, on that, do take note it's a WhatsApp broadcast. So I show you this 6 August is over. So we are going to do another special webinar on the next quarter. But if the community size grow in significant amount, then maybe you can do it even monthly. Okay, so now let's move on to today's topic. Today we're going to talk about 3 REITs, the 3 mapletree REITs. On that, okay, we're going to discuss about that. And if you have any question pertaining to these 3 REITs, do post your question on the Q&A or on the chat side. Okay, do focus your question on these 3 rather than any other REITs, but there are 30 over REITs. We are not going to talk about them. We're going to talk about these 3. Okay. So before I talk about mapletree, let's look at the overall REITs landscape in Singapore. So these are all the REITs listed. There's one more here. Okay, it's the NTT Data Center REITs, which I didn't put it in yet because their website also not even out yet. So I didn't put it in here. So these are all the REITs here. So we're going to zoom into the industrial REITs, which is Mapletree Industrial Trust, Mapletree Logistics Trust. And then we're also going to zoom into a diversified REITs, which is the Mapletree Pan Asia Commercial Trust. So these will be the 3 REITs we are talking. So that definitely there is no hospitality, there's no healthcare sector involved. So these will be the 3 REITs. So let's kickstart on the first one. Okay, but before I kickstart, let's look at how these 3 REITs perform since their IPO until today. So these are the 3 REITs here. From here you can see this is the chart of the 3 REITs against what? Against STI ETF. Okay, so where's the STI ETF? Here. And this one is a REITs index. Okay, IH REITs total index. But do take note, IH REITs total index only start about 10 years ago. And STI ETF actually start only about here after global financial crisis. So there's a REITs that IPO before even got STI ETF, is the Mapletree Logistics Trust. Okay, then after that you look at the performance of this Mapletree Logistics Trust. If you buy this REITs since IPO until now, the return is 372%. So what does a 372% means? That if you put in $10,000 in, now you got 37,000. Okay, 37,200. And do take note, this 37,200 is include dividend. Okay, include dividend. Okay, so what does that mean to you? Means that the dividend you collected from Mapletree Logistics Trust over the year is earning more than your capital invested. So whatever price down reflected in the current market situation is pure profit. Okay, it's pure profit. And same, next one is Mapletree Industrial Trust. Okay, Mapletree Industrial Trust. This is Mapletree, and it IPO later, but you also give a 300% over return. So in short, it is a better performance compared to Mapletree Logistics Trust. But it's still 300% over percent. It also means that your dividend also collected also. You already collect all your money back. And the third one is the Mapletree Pan Asia Commercial Trust, which actually is also not so bad, 200 over percent returns on that. So all the three Mapletree REITs, you can see that if we buy them since IPO and hold it until today, despite what the market have been through, like even Mapletree Logistics Trust went through the global financial crisis, we are still making a very decent return. Okay, you are still making a decent return, and you have collected all the money, all your capital as dividend back already. Okay. So, which is why they are one of the best REITs to invest before COVID. Okay, do think they are one of the best REIT. No, it's a no-brainer to buy them before COVID. But when COVID comes, things change. Okay, the whole things change, and you look at the three REITs. This is the line you draw 2020. You can look at the performance of this three. If you just chop off this part, look at the performance. They don't seem to be going up. In fact, they seem to be coming down. Okay, they seem to be coming. So, is that the time that are they going on a downhill, or is that we call a consolidation accumulation period? There is a time for you to continue. It's an opportunity for you to buy them and hope that they will come back up. As you think, no stock will go up all the way, even the index, for example, US index. Although now everyone says, well, 10 years make more than 10% return, but there's also a period of time that US market have been going sideways for more than 10 years. Okay, for more than 10 years. So this is these three REITs at this current market juncture now. Okay, so now let's look into these three and see what actually is the problem where they are not moving since COVID, and is there an opportunity for us? So let's first look at the first one. It's called Mapletree Logistics Trust. I will use their latest financial result, which they announced in July. Okay, because that is the latest data we have to talk about the three of them. Okay. In case some of you are new to the REITs, what is Mapletree Logistics Trust? And it is mainly talking about warehouse. Okay, e-commerce. That's logistics play on that. And number of property they have is 178. Of course, this is dynamic. It's not constant, as they are constantly buying and selling properties on that. But this, as of 30th of June, this is 178. But you see the figure don't change too much. Between 170 to 180, that's the range on that. So when come to REITs aspect, one of the key criteria investing in REITs is what you look at is numbers. Numbers of properties. Number of property, as quantity really matters. And when there's quantity matters, you indirectly resulted in size matters. So come for REITs, always look for the big boys where they've got size. Okay, where they got size. And this is a good size in Singapore context. Of course, you compare to US, this is penny. They don't even bother to look at it. Because US REIT got thousands of properties. Even 5 figures number of properties. REITs itself. So this is, to them they don't even. But in Singapore context, 178 properties among all the 30 over REITs, it is ranked number 2. It's ranked number 2. In terms of quantity of properties they have, it's ranked number 2. So it's a risk that you should not neglect on that. Number 1 is Ascenders. Ascenders is the number 1. Have the most property one. So followed by number 2 is Mapletree Logistics Trust, which all the while always second. Cannot overtake Ascenders, but nobody can overtake him as number 2 also. And where are they located? So this is where they are located in. You look at under the asset under management for them is, first thing I always look at where is Singapore. So Singapore, they only have 20% of the properties of the, so only 20%. So what does that mean? Means that the contribution from Singapore is not really a lot. And which one contribute the most in terms of property? You see China got 17.8, but you have to add in this place called Hong Kong. And total, they got slightly less than 40%. Okay, so this is where the main stake is. And of course, followed by Japan, Korea, Australia, Malaysia, Vietnam, India is very, very small. It have no impact to the REITs at all. So that is where the key part is at China. So China will determine the rise and fall of this REIT because of the weightage on that. Not Singapore, not Japan, it's China on set. So and you're also looking at it, China and Hong Kong contribute about close to 40%, but in terms of income or revenue they generated, you can see that it is much lesser. It's much lesser. And in Singapore, 20% asset, but it contributes 28%, contribute 1/4. More than 1/4. Here is only about 1/5, but it contributes. So that is what is telling you that from here you can tell that China is not performing. And this is one of the key reasons why this REIT is not performing. Because it is being actually dragged out by China. But just looking at the chart, you can roughly guess, okay, which one is contributing to it on that. So Singapore is very strong and able to help to cushion the risk. If Singapore is weak, I think the REIT share price will not be at current price, will be even lower. Okay, so next is look at the dividend history on that. This is the dividend history chart I plot myself, as there's no chart. They don't provide dividend chart on that. So when you look at the REITs itself, okay, Jeff asked REITs ETF or individual. That depends on individual actually. For me, I don't buy REITs ETF myself, but some of my clients like to buy REITs ETF. So it's really individual. I don't buy REITs ETF at all. And in fact, I don't hold any Singapore ETF. Okay, but I hold quite a number of US ETF. Okay, so that is but that's a sidetrack. Okay, so now let's look at the dividend. So when you want to buy a REIT, we are looking at increasing dividend. So we look at this REIT since IPO, okay, from day one here, then you can see the dividend start to increase, but it come down. So when you see a dividend dip, you need to ask yourself, what happened? So this is 2009 global financial crisis. So it dipped. So you can say, can quite safely say that it's not the fault of the REITs. It is the overall market fault. Systematic risk, it cannot be avoided. So it come down. But it's after the risk, it recover. Yes, it recover. This 8.24, don't be alarmed. It's not a jump. It's just that they have changed their financial reporting. You can see here, there's a change here. So this is 5 quarter. So it's 5 quarter. So it's 15 months. Of course, then it's higher lah. But actually, it's also actually going up lah. Even up to 4 quarter, it's actually over. So they have actually quite a good run in dividend. The dividend have been pretty steady, slowly clipping up. I would say slowly. It's not going up very fast, but at least it's steadily going up until when? Not COVID. Post-COVID. Under post-COVID, because during COVID period, this share price, this logistics share price went up. I think everyone will be aware because you stay at home. Shopping mall affected, office affected, but warehouse e-commerce is booming. So that whole task, the dividend continue to grow. But it's after that, everything start to get normalized already. You can see the dividend start to drop. And it dropped quite significant. Why I look at it? You can see from 7.9 cents, for them to climb to 9 cents, it takes how many years? 1 year, 2 years, 3 years, then 3 to 4 years to climb that. But it's just 1 year only, it dropped to 8 cents. So it slowly go up, just blunt. It's just a stock price, slowly kick up, then a crash come, the stock price just crash. So similar for the dividend, it crashed down. And now this year is only 1 quarter, so we don't know how is it. But you will use this times 4, you will be still on the downside. Okay, with this downfall, hopefully we don't need downfall. Hopefully it's increasing the next few quarter. Okay, but this is what have been happening. And so what actually caused them to have a big dip in dividends last year? So let's look at their key highlights, and this is just a key highlight. You see, this is just a snapshot. You say it's just mainly to let people see the good thing, but you see, it's very hard to see good things. So what I do is you want to zoom into more detail, like this. So from here we look at this part, DPU, dividends. As what you buy REITs, what you want is dividends. The dividend have dropped by 12%. The first quarter this year compared to last quarter 1 year ago, the dividend have dropped by 12%. And the revenue never dropped so much. Borrowing costs never grew up so much, but dividend dropped 12%. So that is a very, very big drop. Okay, costs never go up so high, but dividend dropped drastically to 12%. And next, some people say, hey, what about why got this thing called divestment gain? And this one is only dropped about 7.3%. So you see what they will tell you that the risk manager will tell you 7.3%, not, I still don't look at 12.4, but it still dropped 7.3. Okay, so what does this actually mean? For those that are not aware, for the risk, they will always constantly buy and sell properties. So when they sell a property, there is a capital gain on the property they sold. They have the rights not to give you share the gain with you, but they also can share the gain with you. So for them, they share a part of the gain we invested during last year, but this year there's not much divestment. So they say that if I consider just based on income, rental, all these things, the dividend only dropped 7.3, not 12.4. So that's what they mean by that. But it's still equally bad. Imagine compared with this drop. So that is so actually that is, and for blue chip REIT, that is quite a big drop compared to year on year on that. No, they don't pay 100% for Mapletree or Zig Trust. Okay, they've got their question asked on that. Okay, wait. Okay, next. We will look at, that's 1 year comparison. Right? So now let's look at 1 year, maybe a lot of people say too much changes. Let's look at quarter to quarter. So it compared to last quarter and this quarter. Similarly, but the DPU actually have went up. So it's not so bad, despite but why DPU go up? This is something you see. Property expense has dropped by 10%. Property expense have dropped by 10%. So one of the key reasons maybe is because they sell property off, so lesser property expenses. And thus there is but if we do not include divestment, include divestment, it's still 7.3% drop. So actually this is not a very good financial result. Not a very good financial result. The latest one, not really good one for Mapletree or Zig Trust. And let's look further on their balance sheet. On that is that they look at their gearing, 41.2. Okay, it is considered very healthy. It is considered very healthy for the REITs itself, as the cap is 50% by MS. But you see when the gain cross 53%, to me that is alarm. That's something to be alarmed. So 41.2% is still very healthy. And for those that are no Mapletree or Zig Trust for years, you may know their style of doing thing is that they will call for a preferential offer, okay, then to buy a basket of property, 10 property in one go. At the same time, they'll bring down their gearing. And they'll bring down their gearing to 30 over. Then after they slowly buy property, 1 property, 2 property, 3 property, slowly buy, and then their gearing will start to go up to about 40%. Then after that, what they do? They will call for another preferential offer and at the same time got a big property purchase, then at the same time they bring down their gearing again. So that is their practice by their previous CEO, But now there's a new CEO, but most likely should not change because the Akong is still Temasek. Okay, and the CEO is promote internally one, is not hire someone from outside. So it's still so the staff should not change. So at this thing, so if there will be a big purchase come, they will do a preferential offer. Okay, so that is something you need to take note from. But I don't, but I personally feel that they will unlikely will do it now at this juncture. Why is that? So there's another ratio we look at, is called ICR, interest cover ratios. This is a ratio that we want it to be more than 3. Okay, I want it more than 3. Akong say is 1.5 can already, but to me that is a very low standard. That is a very risky standard. Very risky standard. To me, I want it to be more than 3. So for them, they are not very healthy. 2.9, 2.9. Of course, compared to MS standard, they pass with flying color. But to me, it's not healthy. 2.9 is not healthy. They all the while above 3.1 for these REITs. They rarely go below 3. So this is something that, so with this, I don't think they were going to do any bulk purchase of properties on that. Because they will not improve their health condition on that. So that is something that, that's my view. But I don't know what their CEO think, but that's my view based on what I understand on that. Okay, let me just look at the question. Will REITs report their property value? How often will they assess? REITs will always report their property values every 6 months to 1 year. It is a must. They must report. Okay, so there's a Chen Bo asked, it is a must, and you always see them in their financial result. They will announce their property values. It's all there one. Okay, let me see other question. It's not clear from the financial about their payout policy. Okay, what has the payout history and what they use the retention money? REITs by right they only pay out 90%, and after they use 10% for their own operating. That one you need to go dig into their financial statements on that. Okay, because they got day-to-day operation they need to pay, and sometimes they want to buy properties on that. If they pay 100%, then they buy property, they keep on ask for money. So they pay out 90%. That's a law. They don't pay out and Mapletree REITs always buy property and sell property. So I don't think they were able to pay out 100%. Okay, so Ascender REITs just sold 5 lots the day before yesterday. Can we relate to it? Kelvin asked this. Ascenders always buy and sell one. All the big REITs always do that. Actually, Mapletree REITs also do buy and sell. Very constant, very consistent on that. That is in their blood of the risk manager. A risk manager don't buy and sell property. Something is wrong with the risk manager. Okay, so that's something is whether they buy and sell is good for investor or not, that is secondary. But a risk manager will definitely buy and sell properties. Okay, so they will tell you that it's for growth purposes, it's for capital recycling, for whatever reason. But definitely they will buy and sell the property. Whether is the buying and selling justifiable, then you'll show on their financial result. Okay, it will show on their financial result on that. With ICR less than 3, the gain above 40, the financial strength does not seem strong. Yes, correct. It's not strong. It is not strong, but it is very strong compared to a lot of REITs in Singapore. Okay, it is not strong, but it's very, very strong. It is above average compared to most of the REITs in Singapore. You go and look at most of the REITs, many of them below 3. Many below 3. I do not want to name them, but many. And it's not below 3. You can say perpetually below 3. But people like them so much. I don't know why. People go and buy them. Say this REIT so good. But they are perpetually below 3. Some is perpetually below 2. And yet a lot of people, they have a lot of supporters. Sometimes I also don't understand why on that. But this is not strong, but they are above average. Okay, so next we will want to look at the debt maturity profile of a REIT. Why we need to do that? As we want to know that they need to refinance. all the REITs do take note they are constantly on debt, so they need to refinance their loan. Not like our property loan, we can take 20 years. Okay, the most we reprice, you don't reprice, you just stick on it. But for them, is the loan will mature in 3 to 5 years. They don't have what 20-year loan, 15 years loan, no such thing. The loan will mature within 3 to 5 years. So they die must refinance. And the time of refinance, what is the crucial part is the interest rate at the point of refinancing. So if interest rate is on the high side, it's bad for them. Interest rate low side is good for them. But that one is nobody would know. And thus to maintain that, we will want to have a cut on that. This is what I mean on a cut on that is that I want to have a cut off on the number of, it should not be more than 20%. That is to mitigate the risk of interest rate at the point of refinancing. So for the next few years, it is quite okay. This is above 21, yes, but it's a few years later, and sometimes they can refinance earlier or they will spread out the thing. So it may not be that significant. On that, it's a bit too far to see. We usually look the next 3 years, so it's still quite okay on that. And also do take note there are a lot of foreign currency debts as their portfolio is around the world. Not around the Asia Pacific region. So that is what on that. And you can look at this. And because of this, they will have this thing called forex risk. So this is something that can't be helped. Although they tell you that they will hedge, but there's still a 26% unhedged. So do take note, forex risk will affect the dividends you collect. Especially we are in Singapore. We are fortunate to be in Singapore in a certain extent, but you can also say it's unfortunate that our Singapore dollar is very strong. And Mapletree Logistics Trust do take note that only 20% of the property are in Singapore. That means only 20% of the property collect rental in Sing dollar. The rest of the rental income is in foreign currency. And you look around the region, which country currency is stronger than Singapore? They depreciate against Sing dollar. Even US dollar also depreciate against Sing dollar. So is there any country currency that appreciate against Sing dollar? Okay, and I don't think that Israeli is, and this will affect the REITs. As you can see, 25% of the income is unhedged. So imagine they collect rental in renminbi, and they need to convert the Sing dollar to pay to us in SGD, and the renminbi comes down against Sing dollar, so the dividend collected will be lesser, even if the rent stay the same. Even if the rent stay the same, we will get lesser. So that is the risk this Mapletree Logistics Trust will face. But that is a risk that when we invest with REITs, we don't have much choice. As we look at all the REITs listed in Singapore, how many of them only have pure Singapore properties? Pure Singapore property REITs only got 2. There's 3. I think there's only 3 REITs. Their property is purely in Singapore, all are in Sing dollar term. The rest of the 30 REITs all have foreign currency one. So that is something that we have to accept that lah. But so we have to depend on the risk management of the REITs. We can't help on that. But there's a lot of questions. Let me just answer one of them. Okay, which one is 3 or more now? Richard, later we talk about another one is more than 3. Okay, maybe just for trading. 2 sides of coin. Okay, must add some tax rates. Paragon REIT delisted. Okay. Okay, because of the strong the REIT suffering from a lot of currency, yeah, this seems to suggest that it not be focused and spread out to too many countries. The REIT mandate, do you think all REITs got mandate one? All REITs got mandate. Mapletree Logistics Trust, when they IPO that time, they already say that they will have property across the whole Asia Pacific region. That is what they tell you. They say upfront, they tell you they will have asset across the Asia Pacific region. They are the largest Asia Pacific logistic REITs. So that is what they tell you. and they cannot change the mandate. They cannot say, I want to invest in Asia Pacific. Now I don't want my property overseas, or I buy Singapore. They cannot do that. Okay, because that is the mandate on that. If they want to do that, they need to call for EGM, tell all the unit holder, I want to change my mandate and please approve the mandate. Okay, so that is every REIT got their own mandate that they cannot deviate out from the mandate. Their mandate say invest what, they can only invest what. So later when we talk about Mapletree Industrial Trust, we'll talk about their mandate also. So it's not that they are no focus, it's they have to do that. That is what they are being to do. Okay. Okay. So that is on that. Which we are 100% Singapore. Fraser Center Point, Far East, Hospitality Trust, and Sabana. So these are the 3 pure Singapore play REITs. Okay. But only one REIT is performing. Okay, doesn't mean pure Singapore REITs all will perform. Okay. So next we want to look at is called occupancy. On that. So to me the passing mark is 95%. 95% is the passing mark. So the portfolio itself actually had passed. 95.7, dropped a bit, passed. As a portfolio, they pass. But when you zoom into country, there's a country they fear. It is where? China. And do take note, China got the significant weightage of property they have. Okay, China have, and it's 93%, and it's dropping. 93%, a lot of people say, wow, it's very, very good. Compared to other REITs, yes, it's compared to other REITs. Some of the REITs even worse. You don't even want to see them. And compared to China market, especially China now, we know that China got ghost town. Build already, nobody stay, but they also got ghost industrial park. Build already, no factory. Okay, so build factory, no company. So because due to overbuilding on that, but 93% it is very, very good when compared to other China properties aspect. So you can say that they are still better off than their peers that in China, but as a portfolio itself, this is their painful spot is 93%. So that is one of the key reasons why they also being pulled out. One thing is currency, and I think it's occupancy rate. And in fact, it's come down. And the third one we look at is called rental reversion. You have high occupancy rate, but you have this is what we don't want to look at for, is negative rental reversion. What is negative rental reversion? In Singapore context, I think we know that the rent only keep on go up and go up and go up. They don't come down one night. Okay. But in China, the rent keep on come down. If you want the manager have 2 choice. If they want to keep the tenant, they need to cut rent. Keep the rent tenant. If they don't cut rent, the tenant go other place because it's a tenant market. So no choice for them to maintain 90% occupancy rather than keep the factory empty. They cut the rent, at least still got income. Okay, you don't cut the rent, keep the factory empty, they got zero income. So that is a chicken and egg thing, but it is a negative rental reversion. It is common for China market. I think you hardly see China property got positive rental reversion. So, and this indirectly pulled down their portfolio rental reversion to 2.1%. So that's why they are affecting it. Imagine get lesser rental, also it's still a positive of 2.1, but it's still way below inflation rate on that. All the 26% unhedged. They say unhedged means it's unhedged. Okay. Japan 7 to 15%. Japan actually dropped from 15% to 7% this last quarter on that. But it's still very, very high. It's still very, very good. But Japan market is not a main contributor, and Japan yen, I think against Sing dollar maybe drop more than 7%. You have to look at the other side. What about yen against Sing dollars? And so this is what they say, and this is what have been affecting Mapletree Logistics Trust, which key part is currency. This is one part. Okay. This is really a key part on that. Another key part is China. And also another part is sentimental, market sentiment. People know that China property is no good. Since COVID, they have been suffering up to today. So when people heard about, oh, you hold China property, people don't dare to invest in the stocks. Or people will just dump the stocks. So the stock price will also plunge. So another typical example, you look at Capital Land Invest. Okay. Because it is very deeply rooted with China property. And thus you look at the share price, it's coming down. So that is another thing, a sentiment reason is no matter how good the risk manager is, how good the sponsor is, people don't like that country, that market, and you got exposure on that, you will get hit. And for them, their exposure is not small exposure, not say they got 3%, 4%. Okay, together Hong Kong, they got close to 40%. So this is why they are suffering at this juncture on that aspect. Okay, so that is on Mapletree Logistics Trust. Let me just answer the question. In a view, will China logistics recover? Okay, well, Mapletree, unlikely they will divest all their China property. I would say that Mapletree Logistics Trust will not exit China. Will not exit China because they are Asia Pacific region, and China is a market they cannot ignore. They cannot ignore. They're not like Ascenders. For those that know Ascenders REITs history, Ascenders one of the first REIT that IPO in Singapore. It started with China industrial properties. But now you look at Ascenders, zero China properties. Because they changed their mandate. They changed their mandate to be completely exit China. But who take over? Capital and China Trust take over for the industrial properties on that. But they got someone to take over on that. But for Mapletree, they were unlikely to exit China, and put it their way, the sponsor is Temasek. And Temasek got a lot of property in China. Okay. And to be a logistics powerhouse which in the Asia, you need to have property in China. So unlikely they will exit China. It's just that how are they going to drive to the wave on that? Okay. All these are from the annual report. Yes, annual report will have all these things. Everything will be there. Rental reversion is only on that quarter, how much rental they revise. Okay, it's not, they don't compare the quarter to quarter, they compare this quarter, how many rental how many tenants have renewed, then there's a rental reversion. So that is what we mean by that. Okay. Okay, let me just answer one more question before I move to the next one. Older property need capex to stay competitive. This will be more pressure for DPUs. So this is what they do, they sell properties. And this is one of the reasons why REITs sell properties. Just like Ascenders sell off 5 properties recently. We look at the list left 30 years. And we know that property left 30 years, the value will depreciate a lot faster. And if they can sell at a good price, they sell at a good price. So that is why a manager will constantly go and sell property and buy property on that. And you see, they will try not to hold property that is too long. Unless it's unless freehold, then maybe they will gauge it separately. Okay, so now let's look at, later we come back to all the 3 REITs to compare. Now we go on to the second one, which is called the Mapletree Industrial Trust. Okay, so Mapletree Industrial Trust, this is where they are. 9 billion in asset. 48.5% is Singapore properties. 44.2% is North America property. Why call North America? Because there's property in Canada. So this is why they call North America. They don't call US. Even there's one property in Canada, they call themselves North America already. Okay. And then got 7.3% is in Japan, as they have started to go into Japan. For those that are not aware, Mapletree Industrial Trust, when they IPO in Singapore that time, it is 100% Singapore pure play REITs. What do you mean by that? They will only buy property in Singapore. Industrial building in Singapore, any type of industrial building, any type, they'll only buy in Singapore, and it's a pure Singapore play REITs. But Singapore is really too small. and they need to grow. And they need to grow, and the only way to grow is to go overseas. So by doing need to go overseas, so they need to change the mandate. So they call for EGM to announce that they're going to change the mandate. They are not going to be a Singapore pure REITs anymore. And that's before COVID. 2 years before COVID, they changed the mandate, say that they will buy only industrial building that is in Singapore, plus they add the word called global. Plus global what? But they key a word, not global industrial, they add the word called global data center. So what does that mean? It means that these REITs, if they want to buy property outside of Singapore, the property can only be data center. They cannot go and buy a business park in US. They cannot go to China to buy a office building. If they go to any country, they can only buy data center. So that is their mandate. That's their mandate. That's the mandate they have changed. REITs don't constantly change mandate one. This is after the IPO for about 10 years, then they change the mandate one time. And thus, their data center, after they change the mandate, you can see that data center now become their main focus. 54.8% of their property are data centers. In fact, they are much bigger than Capital DC. On the data center side only. I'm not talking about the REITs as a whole. The REITs as a whole, of course, is much bigger than Capital DC. But just on the data center, if you were to add Capital DC, you have to add in digital core, and you add in the later NTT data REITs, the 3 data center play REITs, 3 REITs add together, the number of data centers they have is still lesser than Mapletree Industrial Trust. And some people say that actually data center proxy, you should look at Mapletree Industrial Trust rather than Capital DC or other REITs, because they are biggest. They are the biggest in size. So that is what they are after they change the mandate on that. Okay. But let's look at dividends. Since IPO, actually the dividend have been steadily increasing. Then after that, it start to stagnant. Okay. It didn't drop. It's stagnant. 13.8. Then after that, actually a lot of people say drop about 0.8, 0.57, 0.43, 0.57. To me, it's not really drop. It's really, in draw and line, it's almost stagnant. Their dividend becomes stagnant. Of course, this one quarter we don't know. You have to see 4 quarter. Times 4, I think still 13. Still 13. Okay, so they become stagnant. It is better than Mapletree Logistics Trust, which is deep. There is stagnant on that aspect. Okay. What time complete? That time was. Okay. Okay, so that is on the Mapletree Industrial Trust aspect. Yes, okay. So that is on this aspect, and then look at this. The financial data. Let's look at the financial data on this. You look at the financial data on the DPU side, it is dropped. Okay, it dropped 4.7%. On that, that exclude divestment gain actually is still dropped. So ultimately, the DPU actually dropped. But compared to logistics, Mapletree, this drop is insignificant on that aspect. Although it's still a drop, but compared relative to their brother REITs or their sister REITs, is insignificant. And let's look at year on year. Quarter on quarter actually is up 2.8%. On that, this one is have to exclude all the compensation on this thing. So for them, which is why I say that their DPU is flat for the past few years. It's not growing. And this is a financial statement, and their NAV actually have dropped a bit, 1.69. And let's look at the financial data, financial numbers. So look at the numbers. Gearing 40.1 to me is very healthy. And then you see the interest cover ratios compared to their sister REITs, which is 2.9. There is 3.9. So it is very healthy. With a 3.9 interest cover ratio, it is very, very healthy on this aspect. And this is what the REITs is currently now on that. Okay, and so to me, the financial data is for this week is very healthy. And let's look at the debt maturity profile. One thing to take note is this price on the high side, 24%. Okay, 24%. This is on the high side, and similarly, they also exposed to currency risk. The US dollar 64.7%. So that is something negative to the risk. We know that US dollar have dropped against Sing dollar this year. And for them, most of their debt are in USD, as most of their data center are in US. Do you think US contribute 40% of their portfolio AUM? And this is where, and Sing dollar only 18.5%. Sing dollar only 18.5%. That is their debt currency profile on that. And thus they are exposed to currency risk, which also cannot be helped on that. That is something that we need to bear in mind when it comes to REITs. They need to grow. Currency risk is definitely there. It's just how they're going to manage it, how they're going to hedge it. But do take note, they are not currency trader. The risk manager are not currency trader. They are property managers. So you ask them about currency movement, they definitely not be an expert. So what they do, just do hedging only. They just do purely hedging on that. So, but certain thing cannot hedge, means cannot hedge. So they have to let it flow by itself. You don't expect them to go and speculate on currency to get their gain. Then they forget what they are doing, which is on the property management side. Okay, let me just look at Don. Okay. Okay. Yes. Henry asked, because they got industrial, they got other. They are not. You take note that industrial take up 40%. No. Capital DC is 100% data center. So it is not an apple to apple in that aspect, unless you carve up or look at the data center performance in that case. Okay. So in the case of flat TPU, we depreciate. Yes, correct. So which is why I mentioned that all the three REITs actually got very good risk manager, and all the three REITs actually got very good risk manager. They are meeting headwinds, but yet they can manage it quite well in that aspect. Okay, if the data center so sizable, should they spin off separately as a pure data center play? That one not my call. That one is Mapletree call. Have to ask the market, do they want to spin it off or not? But if they spin it off, what will happen to the Singapore office building? Then the industrial REITs will have to close shop, no? Okay, sell all the industrial building to ascenders, unlikely, because they are competitor. So I don't think they have to spin it off. They can't spin it off, and they still need the industrial building for them to hold. The borrowing cost is 3.1, is much higher than Mapletree. Yes. What is the cost of difference? Because different country. Do take note, US interest rate is higher compared to Singapore. You look at Poland's money market fund, the USD money market fund able to give 4% interest, and the Singapore only give 1.5. Hong Kong is not even 1. So for them, it's mainly US dollars. So definitely their interest cover ratio is definitely higher compared to Mapletree or Trust, we have zero US dollar debts. Okay, so that is another part on this. Okay. Will that be restricted, dispensed to a very restricted mandate? All REITs got their mandate. It's not really restricted. When they IPO that time, that's how they set the mandate. They cannot change one. All investment managers have mandate. So REITs is also an investment vehicle. So they have mandate. They cannot just anyhow change. And to have the mandate, then they will be focused on that. Okay. And then this is where the risk management is. So Forex, unhedged 10%. So they have lesser unhedged compared to Mapletree. Mapletree Logistics Trust got more unhedged, but for them, they try to hedge as much as up to 90%, but it can never be 100% unhedged. There's no way, because they need liquidity, they need some price movement. And let's look at their properties, occupancy. So one of the weak part you can see, you'll be quite surprised. Data center occupancy actually is very low. Yeah, data center is North America portfolio, do think North America is only what? Data center. 88% compared to the Singapore portfolio 92. Okay, 92. So which why their occupancy is not that healthy. It's 98%. And before COVID, initially the North America data center portfolio is always 95, 96. But over the years, I think there's some issue with their tenant, data center. So a lot of people say AI is a way to go, AI is a way, but you can look at some of the US data center or those tech company got issue. Especially because of work from home, all these things, I think they got some issue on that. And they are suffering, which is one of the reasons why they go to Japan. Which is one of the reasons they need to go to Japan to mitigate the downside risk on pure US focused data center. So they spread some to Japan, but they cannot spread too fast on that. Actually, they got a data center in Hong Kong, which they can buy from Temasek, but they didn't do it. I think may not be a good price to buy at this market juncture. And another part for industrial park, Singapore side, you will always look at this one. Actually, it's more on the business space itself. The occupancy for business park is all the while very low. It is not only to Mapletree Industrial Trust. You go and look at Ascenders, their business space occupancy in Singapore also below 90%. So in general, so that is the pulse of Singapore economy. The business park, like the International Business Park is wrong, the Changi Business Park, all the occupancy is not that good. All is not good. It's not packed. It's only not even 90%. That's in general Singapore business park rental aspect. And this is maybe one of the key reasons. I think they know that they need to do something, and thus they go to data center. If they still stuck with Singapore, I think they will suffer. And this is one of the reasons why ascenders need to go to US, go to Australia, go to Europe. If they stuck with Singapore, I think they also face challenge. First thing is too small. Number two, business park is not really doing well in Singapore context. And next is this one, which they will tell that the risk is low, but to me this is very high. 6.1%. So look at this company, is called what? HP. Okay. This one, of course, they don't tell you. This is a data center, 4.9%. So you see data center, they keep it secret, 4.1%. Actually, these are considered high risk. High risk, especially this one, HP. If HP were to downsize, this REIT will be affected. If HP were to downsize, this REIT will be affected as they are the main tenant, 6.1%. They tell you, oh, it's not more than 6.1%. Of course, they tell you not more than 6. Ideally, it's everyone less than 3. That's the most ideal, but very hard to hit. So this is something you need to know. Key focus at. You have to know HP. Are they doing well? If they're not doing well, then you affect them, because their next rental reversion will affect. And these two, but we don't know who they are. We don't know who they are. If it's data center, they keep very secretive. Nobody know who they are. One. Okay, I don't know on that. Okay, of the three, which is the most undervalued? Okay, let me talk about oversupply data center. Kevin, I'm not very sure. Okay, IVP is under AA, except where occupancy very low. Okay, yeah. Okay, he hints something exciting. We're going to come to change. I also don't know what happened. Let's work on that. Okay, let's just go and look at. They are older type or not hyperscaler. I would say that for Mapletree Industrial Trust, their data center is a bit different from Keppel DC. For Mapletree Industrial Trust, you see is a what you call is a what? It's a triple. You see most of the data center is all triple net lease one. It's mainly more for hyperscaler one. Okay, they don't really have much co-location one. For them, they are all triple net lease. Compared to Keppel DC and compared to Ascenders data, Ascenders REIT got data center, in case you are not aware. Ascenders REIT got data center, and Ascenders REIT, the data center is not small. It's bigger than digital core. It's definitely bigger than NTT. I think it's small. They're smaller than Capital DC by a bit only. Smaller than Capital DC by a bit only. But their data center, a lot of them are co-location data center. For in Mapletree Industrial Trust, most of their data center are triple net lease. Okay, that means they just rent out the whole building to the main tenant to settle. So this is a diversification of sector for. Okay, so this is where their data center. So this is what they have. They got hyperscaler, they got fitted data center, and they got power and shelf. So that is what their data center is, and thus most of them are triple net lease. Okay, so this is what they are on the data center location. Maybe next time round I will just talk on one webinar, just talk about data center REITs. Then we can zoom into more detail on this. Then compared to the other 3 data centers, 4 actually include as centers. So this is what they are. But the rental reversion in Singapore context is actually quite positive. This one is very surprisingly, it is very high rental reversion. Those flatted factory able to give them very good rental on that. And so what they are now is they are able to maintain their DPU, but look at their growth have stagnant at this juncture for them. First thing is that data center is not really performing that well. The US side is not really performing well, which is what they are dragging them down. Not the Singapore property to me, is because business park all the while is so lousy. All the while is so lousy. So it up down don't affect them, and in fact that JTC flatted factory, all this is performing so well. So what is holding them back actually is the US data center. It's the US data center is pulling them down on this aspect. And so but I think they were able to manage it quite well. And at this market juncture, if you ask me that if 2 REITs choose one, I will choose Mapletree Industrial Trust rather than Mapletree Logistics Trust. Okay, so but that's my view. You ask me 2 must choose one, then of course I will choose Industrial Trust rather than Logistics Trust in that aspect. First thing, because of their exposure, the country they are exposed in, Singapore, US, and Japan, compared to Mapletree Logistics Trust, is a lot of developing country, more volatile, and they got good China exposure there, which long term wise I think China is positive, but in the near term it is still unknown. With the trade war coming with US, it is still an unknown, it's an uncertainty there. Although it is well managed, but if you ask me to choose one, I will choose Mapletree Industrial Trust. So that is my view lah. Okay, next, let's look at the third and the last Mapletree REIT. It is called Mapletree Pan Asia Commercial Trust. I think this one can be a pain to some of you. Some background for those that are not aware. It was a merger between 2 REITs, one called Mapletree Commercial Trust and one is called Mapletree North Asia Commercial Trust. Okay, Mapletree Commercial Trust was one of the best REITs in Singapore, and you have one of the best REITs managers in Singapore. Unfortunately, they have to merge with Mapletree North Asia Commercial Trust. To me, the way they need to merge is to rescue Mapletree North Asia Commercial Trust. That's my I say one, not they say one. Of course, when they present, they say that it's to grow all these things, but my interpretation is to rescue Mapletree North Asia Commercial Trust because they are in deep trouble on that because they are exposed to something called a concentration risk from Hong Kong. Before COVID, there is a social incident happened in Hong Kong, and the shopping mall festival was being set fire on. And after that, COVID come. China is the last to really open up, and imagine shopping mall, you need traffic one, so you get hit and hit and hit. Plus, they also got China properties. So thus, I think the must make a decision to merge the two so that still can rescue them. Take one of the best, merge with one of the best worst, so still above average. So that's how the two REITs come into place as one aspect, and thus they need to change the mandate. So they call it Mapletree North Pan Asia Commercial Trust. So what does that mean? It means that they can only buy property in Singapore and Pan Asia. Pan Asia, we're talking about what? North Asia actually. China, Japan, Korea, and Hong Kong. So they cannot go to Australia to buy properties. They cannot go to Malaysia to buy properties because that is the mandate. The mandate is only talk about the northeastern part of Asia. Okay, and some people ask me Taiwan. I don't think they will go Taiwan to buy property. It's very sensitive. How can a rich manager own China property, own Taiwan properties? Okay, so so that is where they are now, and that is the mandate on that. So let's look at what they are holding. 53% of the property are Singapore. Okay, but this is post-investment because, and 61% is from Singapore also contribution. So this is what they have, and you can see this is a part. This is the one that caused them to merge because of this festival walk. It contributes 26% to the merger risk. Before it merged, it is the key contributor to Mapletree North Asia Commercial Trust. It's a key contributor. After it's merged already, it's still a very big contributor to the REITs, 26%. And then we look at China, 9%. So 26.9 plus 9 is 35, which is a very significant contribution to the REITs itself. So a significant contribution always got two sides. Either it pull the REITs up or push the REIT down. For this case, it pushed the REITs down on that. And so this is the data for them. And let's look at their dividend. It has been increasing. It has been steadily very good. Then after it come down already, cannot sustain already. After they merge already, they still can continue to go up. You can see after they merge, they still can, but after that they cannot sustain already because China never recover, and actually Singapore also suffer. We'll look at the numbers later. Singapore property also suffer, which why their dividend has started to drop on that. So look at their TPU, drop 3.8% compared to last year, so it's still a drop. Despite the finance expense drop 16%. Okay. A lot of people say finance expense dropped so much. Why DPU drop? Why the financial expense drop? Because they sell off the Anson building. So they sell the Anson building, of course, less debt to pay up. Then the finance expense of course will drop. It's not because of interest rate drop they pay lesser interest. It's just because they sold off a property. Okay, on that. So this is where their contributor is, and this is the one that is the key part that keep them moving, which is called VivoCity. This is VivoCity. You look at how VivoCity able to contribute to the REITs. So VivoCity is very important. Another important is called Mapletree Business City, which is also a key contributor to the REITs. And the REITs manager have openly tell everyone they have all the properties, but there's only two properties that's not for sale, and that's VivoCity and Mapletree Business City. So anyone want to buy property from Mapletree Pan Asia, they can ask for any property they are willing to sell, but not these two. Okay, if they were to sell these two, the share price will crash. So they also know that they cannot sell these two property, not for sale, no matter what happened on that. Okay, at least at the foreseeable future. So at least investor will feel safe. Oh, at least they got this. I think for those that know VivoCity, you know how packed VivoCity is. So this is their holding, and let's look at their financial data. Gearing 37.9 is quite good. It have dropped from 40%. Why it have dropped? Because they sell off the Anson properties. So gearing up. But interest cover ratio, they have not able to cross over to 3 in the recent year. They have been staying below 3 but it went click up a bit to 2.9, but it's still not that ideal. Still below 3. So that is what they are now. And okay, so this is what part on this. Another negative news about this REIT is, do you see this rating? Do you see this Moody rating? It's BBA2. That is 30th of June 2025. You look at 31st of March 2025, is what? BBA1. So what does it mean? That means they have been downgraded by Moody. For those who don't know what is Moody, Moody, Fitch, and S&P is a rating agency in the world to rate a company. So Moody have decided to downgrade MPAC. Okay, they have decided to downgrade. Although it's still investment grade, BBA1, BBA, but what is the downgrade means to them? Why they need to downgrade is negative to REITs is that a REITs need to borrow money. So a bank will borrow money, depending on what interest rate they will lend it to you, they look at your rating. Of course, if you are BBA1, of course you have to be able to borrow at a lower rate compared to a BBA2 rating. So it is a negative thing to the risk, and Moody downgrade. So if Moody were to upgrade them, I think the share price will come out. So that is something to take note. They have recently downgraded them on that, but still investment grade. But because of the market behind them, they recently issue a bond, a green bond. I think they still can offer only 2.4%. People still buy. Okay, so
tomorrow is Wednesday. What class do you all have on
people
Wednesday?
sometimes don't care about Moody. People look at who is behind them. Oh, behind them is the market. Okay, like still can give you low rates. So sponsor also play a very key part to the rates on that. Okay, and this is their debt maturity profile. You can see, so 22%, 23% is all are above 20% for 3 consecutive years. Okay, so that is something that we will need to take note on this aspect. And same thing, unhedged, no choice, 12% on that. So that is something to forex risk cannot be avoided. And let's look at this portfolio as a whole. Let's look at Singapore side. Occupancy. This is what is not really good at this juncture, which is Mapletree Business City. All the while their occupancy is very, very high, 195% and above. But over the past 1 year or two, the occupancy has come down. Like Google reduced space with them. I think there's another big company decided don't want to renew with them. So this is why Mapletree Business City, the occupancy have coming down. So they also have suffered the fate of other business park. And this is one part that is pulling down the REITs.
Are you forgetting
because
something?
Singapore, they are depending on these two to survive. But this one it's not been, it's a challenging thing. And next you look at Japan property, actually is very bad. 94, 79.8, 76, it is very bad, worse than China. Okay, the Japan property is worse than China in terms of occupancy. So that is what they are currently facing now. And let's look at rental reversion. This is something that is quite horrible. Mapletree Business City, you can see it also give negative. Singapore, they are not for sale property, also suffer. They need to cut rent in order to maintain 90% occupancy. If not, the tenant don't want to renew. So actually that indirectly reflects the Singapore market sentiment. But from rental reversion of all this big property, you were able to feel how is the Singapore industrial coping on that. But this is a very key part. A 19% rental reversion. What does that mean? Means that they need to cut the rent by close to 20%, then the tenant willing to stay. If not, the tenant will go other place. So this is something that is pulling them, and do take note, this two is 30% contribution to the REITs. Plus currency weakness of renminbi and Hong Kong dollars against Sing dollars. So it is a double hit to the REITs on that aspect. And let's look at, these are all the data. I want to zoom into this one. I want to zoom into, not this one. This is just all this you can look for it. I want to zoom into the, here I don't have the, okay, never mind. Let me zoom into here. I think this one, sorry, I missed out this. I want to zoom into this one. VivoCity, you compare VivoCity and Festival Walk. Both are mega shopping mall and both are targeting the local. So you look at VivoCity's this side, tenant sales up 2.1%, shopper traffic down 1.3%. So
Okay,
what
sign
does
ready.
this tell you? Lesser people go to VivoCity, but they are selling more. Okay, lesser people go to VivoCity, but they are selling more, and their rental can go up. Actually, their rental reversions go up. Okay, and this one is overall. So that's one thing. But compared to Festival Walk, shopper traffic up 7.8%, but tenant sales down 3 by 2. More people go to Festival Walk, but less people buying. So you can see a contrast between VivoCity and Festival Walk. So maybe a lot of people, and then a lot of people blame me that a lot of Hong Kong people go Shenzhen, okay, to shop cheaper, all this. So this may let you think of what happened when RTS were to open. People can go to JB for shopping. Of course, people stay in Tampines will not go there buy grocery. Okay, go at RTS there. But people staying in Woodlands, would they go over JB to go grocery shopping
There's
and
a
come
lot of
back?
things you
Because
also
just
don't
taking MRT
use.
train. So what will happen to Causeway Point, which is also a key property for Fraser Center Point? Okay, it's a key property. And another key property they have is at Yishun, also very near. It is a North Point. So would the shopper traffic for Causeway Point increase? Definitely yes. Because more people go to RTS, they'll pass by Causeway Point. More Malaysians come to Singapore, they pass by Causeway Point. But would the tenant sale for Causeway Point go up or come down? Okay, so but that will happen few years later. But that's sidetrack for you to, if you're looking at Fraser Center Point, that's something you need to take into consideration when looking at Fraser Center Point. Okay, so just as festival is just an example to show you what happened to Hong Kong at this market juncture. Okay, but those Tampines Mall, those Bugis Junction, I don't think will be affected. Those downtown one, I don't think will be affected. It's the one near to the RTS station. Okay, so this is what they are. And let me just answer some question. Yes. Okay, so yeah, MPAC really, the share price has been going up. Step up GST above. Okay. Okay, and to your sake, let me just see what question I need to answer. If you add the perp, the gain will be above 40%. Okay, perps may look into equity, but it's actually okay. Perps, you look at perps, that's where you look at ICR. Okay, ICR is including perps. MAS has plugged the loophole by putting the ICR in, including perps. In the past, a lot of risk managers use perps as a loophole to increase that, and nobody knows. So MAS plugged the loophole, like getting perp calculation into the interest cover ratios. And this expose some of the REITs, not these three, expose some of the REITs where they tell people a very good picture, but actually they're using perps that investors don't know, but their ICR really surface and the share price crash. Okay, so that one perps will ICR will able to tackle on the perps asset. Okay, the borrowing cost can be higher than MIT. Yes, yes, that is what is happening now. Occupancy drops significantly. What happened there? Because there is non-renewal. Japan, because there's non-renewal and non-renewal of key tenants. I think they got one property, only one tenant, they don't want to renew. And they want to sell the properties. But I don't think they can't sell property now on it. So for them is, if they can sell Japan property, sell China property, sell Hong Kong property, they will sell. If they can sell. but unfortunately they can sell. And for these REITs, they really currently depend on the two Singapore property to ride the wave through until China can recover on that. And they do not have any property to buy in Singapore. That is I say one. They also they got pipelines, but I think now they stop talking about pipelines one. Okay, they don't really have good property to buy in Singapore. You look at because they only buy property at where? At the Pasir Panjang stretch there. They don't go to Orchard to buy property. Okay, they don't go to outskirts suburban to buy property. Their mandate is to buy property along the Pasir Panjang road there. And you look at the Pasir Panjang road there, any property worth buying. Okay, don't have. The nearest closer one is Harbourfront. Okay, Harbourfront Center, Harbourfront. But I think that property is not worth buying for the REITs. I think you add more salt to the REITs. So these REITs do not have any property to buy in Singapore. So they really have to bank on VivoCity and Mapletree Business City at this juncture until China can really recover. Until China can recover, or they buy some more property in Korea, but currently they only have one property in Korea. To diversify their risk on that. So that is what Mapletree, Pan Asia, North Asia, Pan Asia Commercial, I will skip a note. Okay, so that is what they are now. And let's look at the performance of these three REITs. I showed this performance just now, since IPO. But IPO that's too long. Let's just look at recently. Let's look at more recent, past 10 years. Okay, past 10 years. How have they performed? So you can see that the growth no more already. From here it become this way. And we compare to the REITs index, they are still better than the REITs index. So just now someone asked me buy ETF or REITs better. You buy these three REITs still better than the ETF. REITs ETF. But of course they lose to one index called the STI. STI index have been crazy recently on that because of what? But you can see as because of banks. You look at DBS fly, OCBC fly, UOB fly, of course STI will fly. Okay, so that is why STI, all the while STI underperform REITs, but until the banks start to fly, then STI will overtake REITs. And let's look at 5 year. So this is where you can see STI really fly. Index that don't really fly one now fly because of the bank.
You can keep them, but make sure they are neat.
But I look at all the three Mapletree REITs, you'll be quite surprised. You buy like Lion Philips Singapore REITs ETF, it give you a better return than the three Mapletree REITs. This is something actually quite shocking. I also quite shocked when I bought the graph. The best REITs in Singapore last 5 years underperform the market. Okay, underperform the market in this aspect. And let's look at 1 year. You can see this one start to move faster than the two logistic REITs. I don't know what's the reason. It start to move very fast and even outperform the REITs index. Even up to today, I think it's still moving. Mapletree North Asia Commercial, Pan Asia Commercial. Maybe people are seeing some sign in China recovery or what. For them, they are really moving very fast for the past 1 year. So this is the three REITs, and this is the REITs now. On that, okay, let me just. Why do you pick three Mapletree when all three are not performing? Oh, why not Capital Ascent? Because today's topic is talk about Mapletree REITs. Next topic, next round I'll talk about Capital Land REITs. So I choose a family of REITs to talk about. And why I choose Mapletree REITs? Because they are the best REITs before COVID. And they are better than Capital Land REITs before COVID. It's just the Capital Land REITs now, they are better compared to Mapletree. But would that be this way going forward? We don't know. But ultimately, they have the very strong sponsor, and they have one thing good about Mapletree REITs in general is that first thing, they got very good sponsor. They got very powerful sponsor. They have connection around the world. They can help them to grow. That's one part because REITs need to grow. Number two is the REITs manager. All three of them have one common principle of buying properties or doing fundraising. They have one principle that a lot of REITs don't follow. A lot of REITs don't follow. And a lot of REITs now are being forced to follow because they do that. What is that? Is that if they were to buy any properties, they will have to look at whether would this property increase the NAV of the REITs, increase the dividend of the REITs or not. Okay, if this property do not increase the NAV, if not, it never increase the dividend, they will not buy the properties. Okay, increase means what? No? Even they ask you for money for right issues, right? You don't give them money. Okay, you don't give them money. You say I got no money, I retire, I have no money. You will not be affected. Your dividend next year will continue to increase. So that is what I mean by increase. It means that doesn't mean you must give them money then you increase. You don't give them money, your dividend will also increase. This is what these three REITs have been doing all the while. Compared to other REITs, is they some of them even point a gun to you. You don't give me money, I guarantee your dividend will drop next year. They even tell you must give me money to buy property. If not, I guarantee you your dividend drop. You give me money, I also guarantee your dividend drop. It's just that you drop lesser only lah. So some of REITs is like that. So you got no choice. The gun is pointing at you. You have to give. Okay. So but for these three REITs, they don't do this, and they openly tell the whole world they don't do this. So that is one thing. Investor can rest assured that when they buy into three REITs, they will not be ripped off by that, because some risk managers like to rip off investor by doing that type of things. Okay, so this is what Mapletree, but they are now really challenging. But would they turn around? That one nobody knows. We'll know whether turn around or not 5 years later. Okay, that's the disclaimer. I have the three of them. Okay, but I didn't sell any of them. I didn't. In fact, I buy more Mapletree Logistics Trust few months ago, and that's all I have on the three of them. Okay, so that's some disclaimer on that. Esther say, please repeat reason. What reason? I don't know which one I say. Okay, what are the key takeaways from analysis of these three based on the time trend? Time trend is that depend on time horizon. If we are looking just for cash flow purpose, these three REITs were able to give you a cash flow, but you are looking for big capital upside in the next 5 years, these three REITs may not able to give you. Able to give you a big capital upside on that. But in general, a lot of REITs do not able to give you. But you can give you a steady cash flow, and whether with the I don't think the dividend will be on a downtrend. Okay, I personally feel that their bottom of dividend is around there. It's time for them to turn around their dividends. Or at least stabilize everything. We should not expect Mapletree Logistics Trust the dividend continue to drop for the next few quarters and all the way down. I don't expect that to happen. That's my view. I may be wrong. Similar from Mapletree Pan Asia, I don't expect that dividend to continue to drop unless China start war. That's a separate thing. So to me, that will be almost the bottom of their dividend downtrend. So that is my view on that. They may down for another 1 to 2 quarters, but I think that should be the worst. Okay, but you want them to appreciate 20, 30, 40%, I doubt they're able to do that in the next few years also. So it is more for stability, and you know that they will not play out, they will not go bankrupt. And another thing is that if they will do equity fundraising, you don't give them money, you'll not be affected. Compared to some of the REITs, you must give them money. Okay, especially for retiree, if you are looking for REITs investment, you worry about equity fundraising. Okay, which one perform good? You can go and plot the chart, you're able to see yourself. But the three of them cannot compare because they are all different sectors. One is industrial, one is hospitality, one is shopping mall. So it is an apple and orange comparison, so cannot compare at all. The three of them you cannot put together and compare. Okay, because they are independent.
You know that's like very soon.
Okay. So before I end, maybe I just want to share with you. I got this risk analysis course. Which actually today I talked to CyberCode that I will only offer. I'm not going to do a second run. In fact, I'll run a ETF course for Q3. So this will be the only run on that. If you're keen on that, you can sign up for this, and it will be purely conducted by me. I'm the main speaker and only the main trainer. And this course covers mainly three parts. First is on the risk fundamental. After that, we talk about all the analysis and valuation. For example, we look at all the various metrics. We will zoom into all the key metrics on this. And inside the course, I can tell you names of risks that you should avoid, or what are the things that you should not. We see what is the thing that you will review of. But in a public webinar, I cannot say anything bad about any of the risks. Okay, if I say the IR will call me, because I've been called by IR before. Say, hey, my CEO said they talk about our risks. Okay, so but in the course, of course, I can use them as an example because numbers cannot lie. Okay, so I will share with you more insight on them, on my view on them, and then we talk about management fees. And after you know all this already, the next key part is what is the fair values? What is the fair value for a REITs? And next is how to buy a REITs, at what price. You can buy a very good REITs, but at a very expensive price, you will not make money. Okay, but you can buy a lousy REIT, but at a dirt cheap price, in the end you may make money. So that is where technical analysis have to come in together with fundamental analysis. So we'll talk about that during the class itself. And after that, we'll talk about portfolio, how to build a portfolio. This one I'll not tell you that buy A REITs, buy B REITs. I'll just directly tell you, you want industrial REIT, buy this REIT, why, and it's a couple with what REITs, why. I'll give you the rationale and the reason. Of course, you can disagree, but that is where we can just name individual REITs on that. And then I will have a spreadsheet that will give it to you with, of course, the updated financial data of all the REITs, so that easy for you to analyze, easy for you to look at all the 30 over REITs with their latest financial metric on this. So and after this, some of you will tell me, Darren, what about overseas REITs? So after the course, we'll have a separate session that will talk about US REITs and US ETF. We are not US REITs. A lot of people thought that I'm going to talk about Manulife US REIT or the Pepper Pacific. No, we're not going to talk about them. Okay, that one will be in the course. This is talk about US REITs. The real US REIT, the 100 over US REITs that are listed in the US market, and the many US ETF that's listed in the US market, and how can they complement your REIT portfolio. Some of you may be aware that I buy Singapore REITs, I also buy US REITs to complement one another. Okay, that's why I don't have a hospitality REITs for Singapore portfolio, but I buy a US hospitality REITs to compensate for the Singapore I don't have. On that, it is a way to compensate. So your portfolio to me is more complete. And also we will have another 2-hour session, just a AMA on individual REITs. As the 14-hour course, I try to cover as much as possible, but I may still miss out some of them because I cannot talk about all REITs for 14 hours. So this is a separate session that after you can digest, we can ask me anything about any REITs. It's a closed door, so it can be more direct. But do take note, this is optional. So if you don't want to attend, also can for these 2 sessions. Okay. So the cost fee will be 1620. If you are below 40 years old, you need to come out 870. If you are above 40 years old, then you need to come out 570. And if you skill future credit not used yet, you can use it to pay for your difference on that. Okay. So you are keen, you can scan this QR code. But before that, let me just see. Can you scale future credit? Yes. This one I answered the question already. Can you rank these 3 for returns? Just now I show you the chart already. You can see the chart, right? So the return, you have to depend on what time frame you are looking at. You look at the longest time frame, of course, Mapletree Industrial Trust will give you the best return. But I look at 1 year time frame, Mapletree 10 Asia Commercial Trust give you the best return. So depend on the time frame you are looking at. So that is how we look at. Okay. If anyone got any other further question? If not, Andy, are you there?
Oh, hi. Yes, Darren, I'm here. Can see me and hear me well?
Yes.
Okay, thank you. Thank you, Darren. Yes, thank you for those who stay on for the what do you call it, this to the end of the session. Now, indeed, what Darren just mentioned, and also I also mentioned during the opening speech, right? So if you stay on to the end of the session, that's where we can share with you about this course. So what you're looking at right now, this REITs analysis course, we indeed would like to just also reconfirm as what Darren, our senior financial service director, just mentioned. So that this will be preferably will be last batch for the year of this 2025 because yeah, maybe next initially we may plan to run one on the October. So I think preferably because the October one, I think most probably we may not run it because if, I think Darren got something unable to do that. So I think that will basically the to draw to all of you here. This is the last session for this year, right? I mean, although it's we are just moving into the 8th month of the month, but it is indeed. So what you can actually see and what you can learn from this course is something is not like other courses in the market. As what Darren did mention, when you complete this 3-day class, it's not the end of the course, right? So he will do extra add on the optional thing that earlier on shared by Darren, right? So that's where actually the extra mile or extra so-called the session, which what Darren actually would like to voluntarily to share with all you here if you would like to join in, although you complete this 3-day class. So you may join in today, like you may say that actually, Andy, I'm a non-citizen, I'm non-PR, then how to go about that? No, I think in fact, if you are, since the class is an online session, so if you are today, you're joining as a non-citizen or non-PR, yes, we're still welcome to join for the class, and that will be the cost fee, as you can see on the screen with the tax of 9% will be 1,006. So the full fee itself is about 1,005 with the GST of 9%. That will come up to 1,620. So you're a citizen below 40 years old or is a permanent residence. Of course, you need to be 18 years and above, right? So you'll be eligible at 50% IBF funding or the grant, which is $750, as you can see in this slide, right? And then at the end of the day, you only just pay the remaining, the 50% with GST, which is $870. And also earlier on, someone asking about the SkillsFuture. That's where the SkillsFuture credit can use. So for those who are first timer to use the SkillsFuture, you're not too sure how to go about that, please stay on for the next 5 minutes here because later part I'm going to sign in with my personal SkillsFuture credit account to run through with all you how can you go through that step to claim. Okay, so of course those who know about already quite seasoned to make the SkillsFuture claim, as you can see there's over the chat I did send two separate link, a cost enrollment link and the SkillsFuture or link, which is using the same pass to sign in. So you can just click straight to do the claim already. Okay. Jane asking any assignment or test to complete for the class. Yes. IBF course, there is some form of the competency test, right? So that's where actually it come in place with any how should I say, any government subsidy course where I mean the entity have to ensure that the trainee when they go through the course they really pay attention and then they're really legit to sit through the whole training session. And then for this training session, it come with the assessment. But the good news is the assessment will be in the form of the e-learning manner. And the best part is the assessment will be through the multiple choice question, in short MCQs. So it is not not require you to write the essay lah, so to speak. It's very much on selection of A, B, C, D, or E, something like that. Okay, so that it will be during the last day of the class. That will be on the 30th August, which is in fact, if you're looking to the date, it's pretty soon, right? It's pretty soon, it's just next week, right? Because today we already stepping into the 19th, which is Tuesday. So The first day of the session is next Wednesday, 27 August, followed by next Friday, 29 August, and then next Saturday, 30th August. So the first 2 days are evening session, 7 p.m. to 10:30 p.m. And the last day session is on 30th August. There is a full day, a.m., 9 a.m. to 5 p.m. So there is a consecutively 3-day session. So all the session need to be complete. Okay, so Jane, hope that answer your question. So Amina was asking, is it a virtual or on-site? Yes, good question. It is a online virtual class. Just like now, you're joining in this webinar session. So having said that, you join in this class, although it's an online session. So when you make the cost fee payment, we will prepare the training material in hard copy. So the training guide, it will be still in hard copy, and then it will be make arrangement to deliver to your mailing address. Okay, so that will be arranged for all of you here. So yes, Senki was asking where is the course held? Is through online, right, Mr. Low? So that will be through the online session. Online session. So what I need to do here, you see the link that the chat I will send at about 9:06 p.m. You just click on the link. There's 2 separate links I sent over there, right? So one of the link is the first one is the enrollment. So you have to click on the link, right? Let me just share my screen, right? So as for all of you here can see also, okay? Let's share my screen first. So like I mentioned earlier on, you need to, let me just pull back here, right? So you can see my screen, right? So this is there's a 2 short link I sent over to all of you here in the column of the chat columns. So what you need to do here, you do register a seat, you to click on the link. Okay, and then there's the skill future. So I click on the registration first. Sorry, it's over here, right? The link, this one. So if you want the skill future, you click skill future. Of course, you have to click this link first because you need to register, right? You need to register in order to get a form. So once you click on the link already, right, you should come to this form, right? So you click on the link already, you come to this. Oh, sorry. It will come to this form. Let me just do one more time. Yep. It will come to this form. Okay, so this is a skill future. Okay, the form will be like that. Okay, just now I click the link, right? It will come to this purple color header, CQMS, and underneath you can see the course name. The full name of the REITs course is Real Estate Investment Trust, and then there's a course date. There's only one course date appeared, right? Which is the same date as you saw earlier on, right? This one you need not to do anything because it's auto captured, auto select for you. So what I need to do is the detail applicants. There's a couple of field, couple of columns you got to fill up. So I'm looking to it is almost all of them is a compulsory field except occupation, fill up, and then you have to over here you explain a different tier. Of course, I think most of you are joining as a self-sponsored. I think because this course is so when you apply to the IBF, there's a 2 form. If you happen to be come from financial industry and then you want to recommend this course to your colleagues, and then they want to join in, then you'll be fall under the company sponsored. So, but I would say 99% people go for the self-sponsored. If company sponsored, you can send a separate email to me, right? So over here, explain about different tier as what earlier on shared by Darren, right? So if you are 40 and below or PR, you need to pay 5. If you're 40 and above, then you're eligible 70% funding, then pay 5. So when you fill up all those, you come to underneath under the payment methods. There are total 3 payment methods. The pay now, there's a Visa, and there's a skill future. So if you decided using skill future, select skill future, right? And then make sure all those required field you fill up, okay? And then you click submit. So once you click on submit tab, the next say about in a minute or to 2 minutes time, you should receive a course enrollment form, right? Sent by our backend system in the PDF form format. So that is the form that you need to save it because later when you sign into the Skill Future Credit, you could upload the form into the portal. Okay, you save it. Then let's say you go by Skill Future. So how about that? You see there's a Skill Future. Now we come to this one, right? You have to enroll first. When you get the form, then you click on Skill Future. So once you click on Skill Future, you will come to this. Okay, let me just show to you. So it will come to this page, something like this. Oh, sorry. Okay, it will be something like this. Okay, so SkillsFuture is the government portal, right? So you click on the link, will come to this landing page, my SkillsFuture portal. So you can see there are total 7 boxes. So you need to click on the second box on the top layer, check and claim SkillsFuture credit. And then at the same time, you have to get ready your smartphone to start in. So I always do that. Okay. So you get my smartphone because you got to sign in with your SingPass. So I click on this, so immediately pop up the SingPass tab. At the same time, I go to my phone, I launch my SingPass app. Okay, and then I click on the SingPass tab and I'm going to sign in. There's a code generated, then I got to scan the SingPass code. And over the phone, I got to approve it. Right? It's just like most of I think most of the payment method nowadays they're using the SingPass. Similar for this SkillsFuture portal, they're using SingPass. Okay, so I click yes. So in the next 10 seconds, immediately you can see my name, right? On the top right corner, I have a credit balance. At the same time, you also can see the balance, the credits that you are having, what is the tier, so on and so forth. So I click on this drop down list, I'm able to see all the dollars that I have. So I have my first opening credit 500, I have my add-on credit of 440. So you see the red color, the mid-career credit. So this mid-career credit currently is not fall under the financial cost. Okay, so not only cyber good cost, any other financial cost you can't use it. This column is only for higher learning courses. You got to spend at least about 2 to 3 weeks consecutively, then something like degree course, then you can use this. Okay. At the moment for our risk analysis course is fall under the opening credit, the 500, as well as the one-off SkillsFuture top-up credits. Okay. So this is automatically can capture for you. Okay. So someone may asking, say, Andy, what if I use quite often, I left about less than the amount that I'm supposed to pay. Let's say I left only $500, but I need to pay 585. Then how? So yes, you can claim 585, and then the difference of 85, you can use Pay Now, PayLah to make the difference, which is a later I will go through it for you. So how to submit? Click on the submit tab. Okay. Then the mouse your cursor down to the bottom, select cost to submit a claim. Right. So you see there's a risk analysis. So of course you got to key in because for me I do it almost every alternate day. So I already save the cost name. Right. These are the cost for under our cyber code under the SkillsFuture credit. So you key in risk analysis. I'll select it. I click search. So once I click search, you can see it found a course ID. This course, right? Within the box there is a select tab. I click on select tab. And then the next column, you appear with the enter course start date. So there is a calendar provided. I click on calendar. And then August month, right? Okay, then I mouse to the course start date. The first course start date is on 27 August. I click next. So once I click next, you come to this. This will be the second last page already. So on the left side, you can see all the cost detail. On the right side, you see there's an amount of credit to claim, and then there's a fee payable by you, including GST. So how much to key for these two columns? So earlier on, remember I mentioned, earlier on we have this portion. You have these two columns, right? Singapore citizen below 40 years old. This is the amount of credit to claim or fee payable by you. So you fall under this tier. This is the payment. Five will be the amount of credit to claim or fee payable by you. Okay, so you are aware about that. So I key is pretty easy. Okay, let's say I'm above 40. So I key 585, and then fee payable for you, I also key 585. So earlier on, I did mention there are some of you here, if you have insufficient credit. Let's say if you are above 40, you fall under 5, but you happen to be, you only left $500 in your account, right? So you key in 500. Both sides you key in 500. And then the difference of the balance of $85 can use Pay Now or online, Pay Now, Visa, Master to make the payment. Okay. So once you've done that already, remember you received the form, right? You save the form already in the local drive. So I click browse, and let's say you save it under desktop. Example, you will save it. So it's always in PDF lah. Normally your form will always in PDF. Let's say if you receive your form already in the what you call it? Say example, this is your form. You just click open. So the next 10 seconds also, your form be automatically upload here. Okay. And then before you do a final submission, you can click on your review. Then it will show you, you break down all the things that you key in, especially your attachment, the supporting document that you have uploaded the correct file. And then if everything in order, check claim, have agree and the term condition, and then you click submit tab. So once you click the submit tab, the next page will appear pending for approval. So you see a word pending for approval, that means you have successfully submitted the SkillsFuture claim. And then for your own reference, you can do a screenshot, or if not, you can just, I mean, if you don't do a screenshot also can, because if for your own reference you keep it, then you can, if we do ask you, you can actually showcase that. If not, basically your job is done. Okay, so that is for the SkillsFuture credit. Let me just sign out, log out first, because this is my live account, and then I go through the other three payment types. So remember we mentioned also we have another payment types. Okay, let me see. I go back to the form again. Okay, so we also have other payment type. Remember that? Okay, let me just go through first. Is it here? Yes, correct. So I have this PayNow. I also have Visa. So let's say we start with PayNow first. So PayNow, you have to make sure you link your PayNow app into any of our local four local bank. Okay. So once you key in, you select PayNow, make sure same thing, all the above information you fill up is the asterisk requirement. All those with the asterisk is a required field. Fill up nationality as well, postal code, because we're going to send you the trading material. So you got to key in correct postal code. Then select PayNow, then you click submit. So when you click submit, the next page will appear a PayNow code. And you have to ensure you link your PayNow to any of the local bank or for retail bank. And then you scan, you launch your online app, you select PayNow, you scan the code, the PayNow code provided. Once you scan, you auto capture to company, and then you just key in the name, risk analysis, and then cost fee payable, just key in, and then you submit. Once you click submit, straight away it will debit from the bank, and then there'll be payment acknowledgement sent to you. So if you would like to use a Visa or Master, similarly, so Visa Master, select, fill up all those above requirement field as what required. Okay, done that already, then you move down, then you click submit. Once you submit, the next page will appear, will prompt to interface Visa or Master. You just select, let's say you decide using Visa, you select Visa, and then you have to key in your Visa card detail, 16-digit card expiry date, and the CVC number. Once you've done that, you submit. You'll be one OTP sent to you. Once you key in the OTP, you'll be straight away debit from Visa card. Same apply for Mastercard, and then there'll be payment acknowledgement sent to you. So these are the three payment types that you can select. Okay, and of course, SkillsFuture already run through with you already. Similarly, then you submit SkillsFuture, then you basically the link I just sent to all of you here. You click on the link, or if you are not in time, you just copy the link. So at least later part you submit. With SingPass, log in SingPass to your SkillsFuture credit account, then you can use it to the cost enrollment form to use it as a supporting document. Okay, so these are the three payment types. Let me just so-called go through my slide, and also to see any other question. Let me just go through my slide. Okay. Yeah. So this will be the date. So this will be the date. So it's an online session. Mr. Low and someone asking whether it's online or physical class. This is an online session. So although it's online session, but we still prepare the training material to all of you here, right? So date is here. So this date is a prefix already. You can't change it. So the last day, which is on the 30th August, will be the what do you call that? This will be the day that you need to go through the assessment, which I think someone asking about, is that a test or assessment? Yes. So this is the day. First 2 days, basically there isn't, right? So, but the good news is the assessment question came out is actually within what you have learned during the 3-day session. So the question, it will not be plucked from the sky. It will be within what you have learned during this 3-day session. Okay. So this will be the cost fee for full cost fee. And of course, over here, I also provide the QR code as well as the link. Of course, much easier for you, just mouse over to the chat to click the link. It will be directly linked straight to the registration instead of you have to key manually. Okay. Then if you join in as a non-citizen, non-PR, yes, welcome you to join in. Only thing, the cost fee will be full, 1635 with GST. And we still arrange the training guide to your doorstep. Let's say, for instance, you will join in from Malaysia, any part of Malaysia, we will still arrange the training material, send it courier to your address in Malaysia. Okay, so that is not easy task, but we do that. Okay, so yep, if of course you're a local citizen or PR, this will be the tier. and if you're a citizen above 40 years old, this will be the tier. Now, of course, over here, we still provide you the contact and there's email as well. If you have a question, you still can ask me. Okay, maybe for easier manner, I key in my personal email. Just let me at the same time I look through. Any recording provided after the class, good. Oh, you're not seeing my sharing screen. Let me see. Apology up, my apology. I thought you're seeing, right? Are you able to see my yeah. Sorry, right? Yeah, it is right. Okay. So this is the sharing. Okay. So yeah. Yeah, there will be okay. Recording of the session is meant for submission to the entity of MPF. So if you how should I say, if you how should I say someone may worry that say after I complete the class, I still have question, not sure, especially after one class end already, I haven't start investing. After I start investing, I have some question in mind. I want to ask trainer Darren Chew and how. So we will, as a training provider, we provide a post-training support, okay, uh, during the last day of the class, which is on 30th August, on Saturday, before the end of session, somewhere around 4 plus or 5 o'clock. So it's an online app, it's a mobile app, sorry. It's a mobile app that you can install it into your iPhone, iOS, or into your Android phone, any of the Android OS. And then you can use that app to post the question. So as a training provider, we collate all the question and then we will pass it to trainer, to Darren, and then Darren will reply to you. So that one we call it like a TikTok for investor. We will collate all your question and then you manage it and then we will we'll pass it to trainer, to Darren, and Darren will reply to you. It will currently we are providing about 10 working days. Let's say you end the session on the 30th August, we will open up to 10 days from the last day countdown lah, on the day itself. Okay. On top of that, as even you over this full training support, right? You still can connect to Darren, as what Darren just mentioned. He still open up another 2 more session. You learn after this 3-day session of the risk analysis course. So you'll find that what Darren, the strategy using quite good. You want to open a stock trading account with him, you can go ahead to do that. Then if you open a stock trading account with him, would be much easier. While you stick on to him, you can, as and when you can post him question, also can. So that is actually optional, like individual preference. Okay. So Heng Huat, the recording is not for trainee. The recording is meant for us, the training provider, to submit to the to the entity, which is to the IBF for their audit purpose. Okay. So Vijay, I believe, Bilal, I hope they see my screen. I already shared that already. Ransom Leong were asking any requirement for the course. The requirement, you need to have the laptop, you need to have PC, right? You could do, and of course, during the class, you could turn on your webcam, right, to showcase your face. I mean, except for tea break or lunch break. Lunch break will be the last day, 30th August. That will be the full day, right? Tea break, the first 2 day, maybe 10 minutes or 5 minute break, then you can turn off webcam. When you're back on the screen, you got to turn on your webcam. Okay, that's the requirement. So Jane already mentioned that there's assessment. So it will be in the MCQ manner. It will be shared. It will be the assessment is within what you have learned during the class itself. Okay. So any other question from that? So yeah, over here, let me just type my personal email. It's easier for all. Since the class is on next week, right? So the class is on next week, so I rather it can possible, or you can do it right now to do the registration, right? I provide you this easier way, right? Because you can straight away contact me, reach me, okay? Because the class itself is pretty near, which is just next Wednesday. So I just start my contact detail over to everyone in the chat. Okay, you can reach out to me via the DID, or even, of course, you don't call me now. I'm still talking to all of you here. You can call me if you want to, maybe tomorrow, starting from 10 a.m. onwards. Or if not, you can send an email. It'll be direct email. Sengi, is this the last run for this quarter? Okay, Sengi, good question raised. Preferably, this will be the last run for this year. Higher possibility. So as what Darren did mention, right? So it try to participate, because October, in fact, initially, when Darren sent us the date, we do have that date. I think on October, we may, that's quite possible that we are moving into another cost, right? It could be ETF, ETF cost, but it's a different cost. So if pertaining to what Sinki was asking, if can try to register right now, right? Try to register right now, Mr. Low. So as for you, the sooner you learn, the better it is because you can straight away apply it. And then also, let me just also emphasize on the funding side. So also the funding from the IBF side, it is as a training provider, we always want to emphasize to those who haven't signed or haven't joined or enrolled for the course because the funding from the government from this case will be IBF, Institute Banking of Finance, right? The video I play in the opening speech, they are totally care of by MAS. So they are giving this funding for local citizen and PR. So the funding come in never easy because like even for this course we submit for funding support, it takes about six months to a year to get approved. Okay. I mean for this course consider fast. For some course take even longer, close to a year to get it approved. So the approve of the course itself is not forever. Like every course like this course title risk analysis, when we apply to IBF, is only valid for 2 years. Every 2 years we got to renew the license. Okay, so that is actually on the IBF end. But we also do not know when IBF they may remove the subsidy. Although maybe they approve for 2 years, but we do not know maybe as and when they, as government they have the full right to remove the subsidy or reducing subsidy is very possible because over the years, in the year of COVID, that is about 5 years back. So remember, COVID hit Singapore's April, right? Yeah, March or April of 2020 that time. If you are citizen above 40 years old, you only pay 5% the course fee, 95% pre-fund by IBF. So that time the class is full, 70 people, 60 people, because trainee course participant only to pay 5%. Imagine $1,000, you only pay $50, the other 950 pre-fund by IBF. But after the following year, they dropped to 90%. I mean 2021, 90%. And then 2022, they dropped to 70%, which is that 70% until now. Okay, so higher chance, you may say higher chance, I'm not too sure because I'm not from the IBF end. But I can say that actually from that direction, you can see that the funding you never get more, you get lesser, or get lesser. Never mind. Just worried that they might totally remove the subsidy. Okay, that's the reason why I will strongly encourage if those who can make it, try to participate. Yeah, thanks, Singi, Mr. Low asking this question. So, if can possible, try to enroll it, right? So preferably this should be the last batch or last intake or last class for the year of this 2025 itself. Okay, so I'm still around here to answer your query pertaining to the course arrangement. And if you do have any question pertaining to administrative, the course arrangement, so and so forth, please, now it's about 9:35 p.m. Open up another 5 more minutes at 9:40 p.m. For you to raise question, to post question. So bear it in mind, it is an online class, and then the training guide, the training material, it will be in hard copy in large file. Okay, and that training material will be make arrangement to deliver courier to your mailing address based on the address that you key in. So remember, when you key in the address, because we know a lot of Singaporean or even PR, they have multiple properties, so you have to key in the address they are living in. Okay, because if you come across three cases. They key in the NIC, but I think maybe they address the sublet out to the tenant. So the cost not reach the tenant plight, but it's not reach to their place they live. Then when I say, Andy, can I get that cost note to deliver? No, sorry. Once you deliver there, that's it. So make sure you key in the address you're living in. Okay, you're staying on, so as you can receive the training guide seamlessly. Okay, so that is based on payment made. If you register, not means that you automatically we will send you the training guides. You have to make sure you also make the payment after the subsidy. Okay, so let me just repeat. Full course fee For non-citizen, non-PR, foreigner, this will be the course fee. We still accept you to join the class. It's just only you're going to pay a full course fee. Okay, it's still available for our course. Okay, which is 1,005 before GST. So you're a citizen below 40 years or PR, this will be the fee. A5, Skill Future already run through all you already. You can click the link, or you're not in time to submit the claim, you can just copy the link, take a picture of the link, and just post it in the chat. So you can do it later, maybe tomorrow, or I mean, of course, you could do it sooner because the class is next Wednesday already. And then if you're a citizen above 40 years old, 585 is your cost fee payable, and then Skill Future claimable also, which is I also run through it for you earlier on. Okay, and I provide my contact. You can instead of send to the inquiry, you can straight away send to my personal email, which I think typed to everyone in the chat already. Okay, any other final question? Any other final question? So we also understand there is ransom. Yes. Yes. Very good. We have Ransom Leong to ask the question. Very valid question. Okay, must pass the test question mark. Okay, so when you go through the 3-day session, you don't miss out all the 3-day session. But this one you don't quote me lah. But I can tell you, normally 97%, 98% of the trainees, when they go through the assessment, they will pass it within the first attempt. Okay, let's say back to Ransom Leong will ask this question. Because some people learning a bit slow, right now. Okay. If you fail during the first attempt, during the assessment time, because we give you 1 hour time to complete. Okay. But the good news is during the assessment time, the trainer still review. Don't worry. Of course, they will not review the answer. But you have question, ask him the question, not too sure, he will answer you on the question. But you still have to select your own answer. But the answer will be all MCQ. Okay. Now let's say you fail during the first attempt. Okay. During the assessment, we preset for you. You can try this during the assessment time to go through a second round assessment. And the passing is about 60 lah. Out of 100, you're going to pass. Let's say, I think it's about, if I know, it should be about 60 questions, you're going to pass 40 over question. It's about 60% passing rate. Okay. So as long that you sit through the session, like I say, the question came out is within what we have learned during the class. It's not how should I say? The question it is not out of the sky, but it is within what you have learned. Okay, so Ransom, hope to answer your question. And the good news is you need not to write anything. You need not to write essay or thesis. Right? It is MCQ, multiple choice questions in MCQs, and we are giving about an hour time during the assessment time. On the last day, which is on the 30th August on Saturday. Somewhere around about 3:30 to 4:30, that range. Okay, right? So first 2 days basically just have a easy heart to learn through. Then the last day till the third quarter, the last day will be the assessment. Okay, and of course you need to, all the 3 days you need to submit attendance, right? All of you have to make sure you have your SingPass app in your phone, right? Because our attendant, we are using Skill Future attendance, right? We need that to submit to the Skill Future. So you have to make sure your phone with the SingPass app itself. Okay. So Ransom, thank you for your question. Yes, anyone have any other final question? Now we are pushing 9:40. So okay, I understand there are some of you say, Andy, I have a friend very keen on this course, and especially my friend also keen to learn this risk analysis course. But however, my friend or whoever or got some work unable to join in. So what I can do here, when the session end later, I'm going to send a thank you email. With the thank you email, I also will copy the slide, like this slide, I will copy that, also with the cost and enrollment. So what I need to do here, if you have friends who miss out for tonight's session, so when the session end later, you can help to forward over the email to your friend. So let your friend, he or she, do their own registration, especially the class of next Wednesday. So if you have friends still have question, you can pass my contact and email over to your friend. So quickly get your friend to call me tomorrow or within this week, because we are preparing the training material.